Good morning, everyone. David Paul speaking. I'm the Managing Director of VectorVest in the UK. And I want to talk this morning, first of all, about the state of the UK market in general, and then to look at four stocks that I believe can, in fact, move for us in August, September 2020. So let's have a look at my first slide. Is in fact the VectorVest composite of the UK. And that's a composite indicator of all of the 2,000 shares that we follow in the LSE and AIM. And superimposed on the chart, I think you can, at least I hope you can see the red and the green triangles. And those are our medium-term market timing model, which tells us when it's safe to be in the market, when it's not safe to be in the market. And the last red signal happened just in February, just prior to the COVID-19 sell-off. Then our last signal, in fact, was a buy signal, which occurred on the 7th of April. And since the 7th of April, I've been, in fact, building positions in the London stock market. And I've reported on those positions in this video, in this series of videos, quite a few times. Now, down below the price, the candle plot, first of all, we can see the blue line study, which is the momentum of the VectorVest composite. And the price of the composite is rising, but over the last few weeks since the June the 9th high, momentum hasn't been able to follow. And that's a warning signal. But what is a very strong warning signal is the green line study, which is the proprietary VectorVest buy-sell ratio. Every day we allocate buy recommendations and sell recommendations to every share in the market every single day. And at the minute, the price of the VectorVest composite is rising, but the buy-sell ratio is falling. And that divergence is a warning signal that we need to be very careful indeed. At the moment, the trend is still up, but if we should get a sell signal from the medium-term market timing system called the DEW, then that signal needs to be taken very seriously indeed. A signal preceded by a 2-month divergence invariably causes a fairly swift move. So if that should occur, I won't be buying any more new positions, and I'll be watching the stop losses in the positions that I've got very carefully. And thirdly, probably culling the laggards in the move up from April. I've got a few shares at the bottom of my list that haven't really done that much. I should be getting rid of those. Now, 4 shares that look interesting, and these are small cap shares apart from one. Kingspan, now I think you can see the candle plot of the price. And in the same window as the candle plot, that green line study is the VectorVest valuation. And at the moment, we believe that Kingspan, a small building consumables company, is in fact markedly undervalued. Down below, we're looking at earnings per share, and over the last year, earnings per share has been revised upwards, and as it was revised upwards, our valuation went up through the roof. So we have a share that's in fact made up all of the February loss. So it's showing relative strength to the overall market. And if the general market starts to move, I think it's just a matter of time before that little share moves higher. So that's one. AUG is a share that at VectorVest we had some great times in the last move. Over the last year, it's been consolidating in this triangular pattern. It's undervalued, earnings per share growing strongly indeed. Wait for a breakout of that simple little trend line, and that breakout should occur on reasonable volume. The only downside of Augean is that the spread is quite wide, so you have to be careful of that. Nevertheless, it has the potential of moving to a £3 target from here. Kiptech has had a great run. Again, you can see over the last 3 years that earnings per share growth. It's undervalued in VectorVest. It's broken up through the sell-off in February/March, and it's got a £3 target written all over it. And the last one's a much, much bigger company called Pershing Square, an asset management company, significantly undervalued in Vector Vest. Earnings per share has grown strongly over the last couple of years. It's, as you can see, made up and more the sell off in February, showing exceptionally strong relative strength to the overall market. And if the general market continues upwards, then I believe that there's an awful lot of upside in this share. It's trading at half of the Vector Vest valuation. So, ladies and gentlemen, I think that the one thing we need to be very careful about is the overall market itself. I believe that that's 70% of the exercise. Although the trend is still up in the overall market, the breadth of the market is falling substantially. We've got a big, big earnings day today. We have the FOMC meeting this afternoon. We've got earnings coming out from all of the banks in the UK, the big oil companies, a resources company called Anglo. And of course, we have the earnings coming out from all the leading US high tech companies. And tomorrow we've got Amazon, Apple, and Google. Today we've got Facebook. So we've got a big, big, big earnings week. So I shall be watching our medium-term market timing system. As if that should turn down, then I will be, in fact, becoming quite cautious. I hope this helps. Thank you very much.